In this video, I am going to show you a very simple trading strategy that you can use to quit your job provided you follow all rules religiously and consistently. Sit back, relax, and learn something new. Alright, so the first thing that we need to do or we need to validate is to find a point of liquidity. We know that within the markets, it's actually driven by supply and demand, and we do not move the charts whenever there is no enough liquidity. How do we grab that liquidity and where do we find it on the charts? The first thing is to actually apply a concept that we talked about in the first video of this month, which is actually on our channel, where we talked about mastering the 3-day cycle. But in this particular case, we are just taking the concept of the double top or double bottom, whereby we are saying what pattern do we validate as a double top or a double bottom. The first thing that we said is to see the first leg. Like in this particular case, we can see the first leg or the market turning in an upside direction before turning in an upside direction after a downward move. That's basically a sign of a reversal. After that, we need to see price interaction with the 50 EMA. For the purposes of those who are just following us, the 50 is the one in blue, 13 the one in red, and 5 the one in yellow. So price interaction with the 50 is actually a demarcation of the first leg and then the second leg. In this particular case, we can see first leg being issued, interaction with the 50, and then second leg being issued like that. If we see something like this, we now validate it as a validated double bottom in this particular scenario. After that, we need to see involvement of market makers. How do we see involvement of market makers? We see involvement by actually breaking the interacted with the 50 zone or the neckline. So this was actually broken with this move to the upside that actually moved up to this level. We can see the market breaking this neckline to this zone. So our entry is when they want to tap in that particular liquidity. We can see the market actually coming back to tap in that particular liquidity, where we can now start to look for candlestick reversal patterns on the smaller time frame. So basically, the first step is to validate a double top or a double bottom, and then wait for the market or for the market makers to get involved to break the high or to break the neckline, then tap in that same particular liquidity later. Let's now have examples and how you can apply, and this is what is very important, right? So the first thing is, if you cannot see a setup clearly, do not force yourself, right? In this case, we can see the market going to the upside like that. After going to the upside, we can see price interaction with the 50, right? And then the market coming back to the first leg level like that. At the first leg level, it came back and it went below. What are we saying? We are not interested in trading this structure, but we are interested in trading after the market makers breaks this low, right? This low or this neckline of this whole pattern. We can see the market makers getting involved with a sharp move breaking this low, and then our entry is when we come back to retest that neckline. This is actually almost similar to the traditional concepts, but we are saying the traditional concepts were subjective in terms of validating this particular pattern, right? Going further, we can see we had a beautiful validated double top, double bottom, where we had our neckline at this particular instance. First leg, retest of 50, and then second leg were issued clearly, involvement of market makers, and then retest of the neckline at that particular point. I would advise you to take only 50 pips for this particular trading strategy, and make sure that when you are taking 50 pips, you have half of 50, which is 25, on your stop loss side after a validated candlestick reversal pattern. In this case, we can see as well first leg interaction with the 50 EMA, second leg to this first leg level, and then involvement of market makers to break this neckline, and the market came back to this particular zone. In that case, that's basically how you will be doing. Right now, we have been issued with this particular structure where we have first leg, retest of 50, and then the second leg. And in this particular case, we are saying this was going to be our neckline, and the market went back to that zone, and currently I am in longs on this particular pair. So basically that is how you do it. How will you quit your job? You need to be consistent in all your actions. If you are going to follow this particular strategy, no matter you come across a few losing trades here and there, you need to stand for this particular strategy over and over again. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe.